Perfect. And then you just look at me.
Free conversation,
Yes,
kind of.
Casual chat.
My name is Aivars Belis. I am CTO at DECTA. Technology evangelist basically for last 25 years being in financial services. As on issuing, as acquiring side, processing side, and of course e-commerce is there as well. So I've seen everything around, and from old times where there was no startup, no cloud, and now living in absolutely different evolved technology environment. That's why my hair is gray. Well, I think there's huge synergy and actually kind of collaboration. Otherwise, both of them would lack a lot of opportunities and possibilities nowadays. First one, which I think is so there's new term, quite emerging trend we call embedded finance, and that's where actually fintech and e-commerce overlaps, or actually e-commerce could empower their offering to end customers by embedding financial service solutions, capabilities into their platforms for their users to stay longer with the end user. And that's where actually, so embedded finance, e-commerce, merchant, taking as a partner fintech, banking as a service is coming there. Well, banking as a service, another emerging trend, and for fintech to embed finance, that could be one of the options to go for. Banking as a service by itself, we could say it's offered as by traditional banks and then new neo-digital banks. My opinion is, and if you will take a look statistically, mainly and the best offers are coming from new incumbents, new banks, because their platforms are not burdened by legacy, so they can give those APIs, they can compile that servicing to merchants and other players, where all traditional banks, some have done it, but percentage-wise they're still there. I was speaking on presentation yesterday, I think there's Gartner prediction, which was about 30% of large traditional banks with assets for more than 1 billion till the end of 2024 will have banking as a service, as a revenue stream to be offered. Huge prediction. I don't believe they will reach that exactly for the legacy perspective. That's kind of a little bit opposite, but trend is there. And it's definitely possibilities for financial service to tap into actually other users. And it's actually also about inclusion at the same time. By inclusion, I mean that user doing maybe daily shopping, maybe could afford buy now, pay later, capabilities there, or some other services which maybe are not available through the traditional, banking environment. By my opinion, there's multiple categories which you can speak about. The first one is classical stuff, which is about giving payment capability, and that's different industries, starting from parking, ending up by Uber, and then whatever is convenient for you just to tap into that. But there's much more, and then that much more is first one is definitely, I think it will be more uptake of that, is buy now, pay later. So instead of, if you can't buy, or you're speaking about, bigger payments, furnitures, capability to provide instant loan, installment, and not just traditional buy now, pay later, but that's about actually issuing maybe small loans or stored closed loop loans. That's one of those embedded finance inclusion at the same time, basically for maybe unbanked or let's say underserved consumers. That would be in buy now, pay later scheme. Then other travel industry, let's say, it's already there a little bit. It's about quite low risk possibility COVID has ended, people would like to travel. Sometimes it's quite an kind of spent investment to be done to do that. And some of the players are already offering possibilities that actually you can reserve your booking and ticketing, but actually do it in parts, like in installments, but actually you haven't received any service yet, but you have booked your travel for, I don't know, August in Portugal, and you're paying in 3 or 4 installments for that. And that's embedded in the same environment. And of course, all our Uber, food and everything in one place, that's another example of embedded finance. Another one which is still coming, I think, to the market, not so popular, that would be in other industries like utilities and then, I don't know, even the same farming, which is about instead of buying fully fledged machinery for yourself, actually kind of renting that, creating services to rent, subscribe for them, and a couple of examples are actually on the market about that as well. So that's my kind of view. It's about embedding finance, and there is another aspect which is vice versa. So now we were touching basically retailer, e-commerce retailer, traditionally embedding finance capabilities to give payment, buy now, pay later, maybe issuing even loans, closed loop or not closed loop loans, sometimes benefiting from brands behind. If it's big bank, banking as a service, giving you that opportunity, or loud fintech name, and you are saying you can get Klarna loan, yeah, why not? But there's cost, of course, and that's about you build yourself versus your partner. And I think partnering is nowadays decentralized, creating big solutions for fintechs. That's about partnering, not building vertically everything yourself. Another example, and this synergy is from another side, and which is about if we take the same resellers, merchants, having traditional, hopefully one partner to do banking and to accept payments. Quite often what we see, what they see, actually they have multiple partners, which means one banking partner, then potentially point of sales. If they have also physical stores, they have another vendor to provide terminals. Then there's another vendor for e-commerce. And of course there's cash desk, potentially again another one, and then there's another chain of suppliers and everything you need for utilities. Huge amount of vendors to manage, payments to pay, and actually put it into one accounting. And I think another kind of synergy which is coming there, if we speak about those ones providing SMEs banking capabilities, combine those things together to create kind of one-stop shop or ecosystem where actually they could have account, issue business card, order point of sales, connect e-commerce, connect it to the accounting for the same environment, and based on your transactions within 3 or 6 months, that bank or credit institution behind that bank, or maybe partner behind that ecosystem, they know that your turnover per month is around this one, your money stays there, you spend around that one, you can ask for a loan, your business loan, in the same environment, maybe by the same institution, by another. And that's another example of actually enabling, yeah? But it's bank to retailer, but thanks to the fact about creating ecosystem around and one-stop shop approach. And that's my another belief. The second one that we just recently tried to address basically by trying to combine technical banking platform to address this kind of market niche about combining those things together. So actually fintechs, credit institutions or traditional acquirers can offer these kind of solutions for the merchants.